Okay, welcome to our final video. In this item, we're going to briefly discuss the periodic system. And when I say the periodic system, I should be more specific. I'm talking about inventory systems. There's two types, and so far all your work has been based on the perpetual system, where we update the amount of inventory we have with every sale and purchase. Because think about it. When I asked you to do your journal entries, every time you made a sale, you need to take the inventory and move it to COGS. And then when it was a purchase, you had to increase your inventory balance. And perpetual means continuous. So under a perpetual inventory system, you are continuously updating your inventory. On the other hand, we have periodic, and periodic means one like per period. And the best way to explain the difference between the two is how much they're involved. So when you think of a small business, like the local deli or a small trade or mechanics business, they're not going to update their stock every time something goes in and out. Think of, let's say, the local deli. Every time that you buy a loaf of bread there or a carton of milk, they're not going to update their milk levels or the number of milk in their system. They just take your money, give you the milk, make their sales during the day. And then when they get to the end of the day or the end of the week, then they go and count what's left. That's a periodic system, where instead of keeping track of inventory every single sale and purchase, you just count what you have at the start of the period, make your sales and purchases, and don't worry about it. And then when you get to the end of it, you count what's left, and the difference is what you sold. Whereas the perpetual system, you're keeping track of every single movement. And the perpetual system would be more commonly used by larger businesses. So not the deli, but someone like Woolworths and Coles. Because what you might not realize is every time you go through their checkouts, every time they scan an item, it's updating their stock levels. So let's say that you bought 2 litres of milk from Woolworths and you scan it through the self-service checkout. Then immediately it updates the levels of Brown's 2 litre milk and reduces it by 1. Now Woolworths can afford that because they're an ASX business. But the local deli, a small retailer, maybe like a fashion retailer or some other small up-and-coming business, they're going to use a periodic system. So what I'm going to do now is take you to the textbook that I've been referring to and show you some examples. Okay. Let's see what we have here. Oh, there we go. We've got these cricket scores at the moment for those interested. Looks like India will probably win this one. Coming back to accounting, not this one, this one. So here is the difference between the perpetual system and the periodic. So on the left, this is what we normally do. Let's focus on the sale. So on the left, we have perpetual, and this is what we've done in class. You record the sale, and then you record the cost of the inventory that was given to the customer. Now look on the right. On the right, it's just one journal entry. That's a periodic system. You might be saying, but they haven't kept track of inventory. No, they're just going to figure out the inventory at the end of the period, hence periodic. Now, to give you a better example of that, let's come down to what the financial reports or financial statements will look like. And I'll zoom in. There we go. So if we're talking about the perpetual system, and let's say this was for the month, we've got our sales, less the cost of goods sold, and that will give us our gross profit. We don't need to do any calculations because we've done it every single sale and purchase. So we always know what our cost of goods and inventory is. Now compare that with periodic. So we've got our sales here, the 40,000. And then what we do is we go opening inventory. So the opening inventory for this period was $8,000. We add all our purchases. So we go back through our journal entries and we look at all the purchases, we add them together. We say, okay, we purchased $20,000 of stock. So in total, opening inventory plus our purchases, we had $28,000 of goods available for sale. But when I look at my closing inventory, when I've gone into my storeroom or my warehouse at the end of the month, I've only got 10,000 left. So that must mean that I sold $18,000 worth of products. Well, I'll rephrase that. $18,000 of goods, cost of goods has been moved. And that's how we get to the 18,000 here. We compare what we had or what we bought with what's left, and the difference is the cost of goods sold. So both roads lead to Rome. It's just a periodic system is this calculation to find out what we sold for the period and what we have left. Now, how will you know what your opening and closing is? Well, what you do is you go into your warehouse and you count everything. So depends on your business. If we're talking about the local deli and like they're just counting milk, not too bad. If you're talking about retailer of like lots of small cheap products, not so fun. But yeah, you go in, you count your opening inventory. At the end of the month or the end of the period, you go back into the warehouse, you count what's left, and then the difference is what you sold. So what's the benefits of this method? Well, it's simple, literally. Go in at the start, count what you have. Go in at the end, count what you have. The difference is what you've sold. More suited to small businesses without computer assistance, and I agree with that. So simple, easy to use for small business. But when it comes to the perpetual system, the more advanced system, this tells us our inventory levels all the time. It tells us our COGS all the time, every day. And it's more suited to larger businesses with more money at play. But it's not needed for small business. Now, when it comes to the assessment, the calculation you're going to need to be familiar with is this one here, the gross profit calculation in the periodic inventory system. And this is what we saw previously. Opening inventory plus our net purchases, and I won't be that evil, it will just be purchases, equals the cost of goods available for sale, less your closing, equals cost of goods sold. And you need your cost of goods sold so you can determine your profit. So we come down here, we get our sales, less the cost of making those sales, and that equals our gross profit. Pretty straightforward. So at this point, I'd recommend taking a screenshot or a photo so you don't have to come back to this video all the time. Here it is again. Very similar. I'd say the only difference is they've got this extra line here saying goods available for sale. Would I like you to do that? Yes. I'd like it to look just like this. And we've just got a final example here. So what I'll do is I'll show you the solution. So you may want to just have a quick read of this question. So you may want to pause the video now And then once you've read through the details, come down and check the solution, which is just down here. I'm not going to elaborate too much further because it's quite a simple calculation. And then as for the trading statement is just sales take COGS equals gross profit. So not much difference there. Now, on a final note, I'm just going to quickly remind you about the journal entries for the periodic system. Now, I don't believe I'll be making you do this. So what I'll do instead, perhaps, is I'll send you some PowerPoint slides which elaborate on the journal entries, but essentially it's just the same as a perpetual system, but you don't worry about that COGS inventory entry. And instead of saying inventory, you just say purchases. That's about it. But I'll give you some slides on that. So let's leave it there because you've had plenty of videos so far. So thank you if you've watched all of them. Hopefully they're going to be of help with your work tomorrow and your assessment questions. Feel free to send me questions by email, but I won't be replying probably till late Monday/Tuesday. That's all. Thank you and enjoy your weekend.